Alright guys, I am back again with another video, and today I want to show you a trade that I took on my Bullinux account. Opened the account today, passed the account today with one trade. It's not typical, but it's something that I did today. Want to show you what I did, what strategy I used, and what you can do to duplicate what I just did. Alright, so not going to say that you're going to be able to do that all the time, because really that's not the typical thing that you see, and it's kind of hard to do, but want to show you the strategy you can use to be more consistent and get good trades like I just did here, and I'm getting ready to show you that. So let's talk about it. Alright guys, so before I get to the video, let's look at this chart. I want to talk to you about the chart real quick. I took a little trade right here. I was going to go short here. I got out of the trade immediately. This is where I took my normal trade that I wanted to take, where I made the profit $3,500 trade, and that's where I took that trade right there. This was just a little $60 trade. I got out of that trade really quickly. This was $3,500 from here to there. And the reason I got out of this trade was because of three things. When you look at this chart, you see these three bars here. There's one here, there's one here, and there's one here. We're looking at the bearish bars because the market's moving to the downside. So we want to discuss those. A lot of times you think that when you see this going, you get a big volume bar like that, you're figuring, hey, this is a good move. This is going to be more downside move. And most of the time, I never trade these big volume bars because a lot of times those represent exhaustion. So it could be basically, in this case, exhaustion of the sellers. So we see this big bearish bar form, and it represents the peak of the selling pressure. And this is where a lot of times where you'll see that buyers are stepping into the market. All right, and that's the peak of the selling pressure, and that's basically where it was. And then the market moved to the upside. So for me to take that trade, I'd have been in a losing trade at that point. So I'd have been in drawdown, and based on, you know, certain things, would I've been able to withstand that drawdown. So that's one thing. Also, it could be institutional accumulation. Okay, institutional accumulation is basically where we see these bearish candles with high volume, indicating that institutional investors are accumulating their shares or at the lower prices, basically, and they take advantage of the panic selling by buying at what they perceive to be a discount in the price for them to get this market at that level. Okay, and then the other thing that it is basically profit taking or short covering, where traders who have been in the short market are deciding to take their profits, and that's what this represents basically, because a lot of times you'll see that big volume bar and the market goes the opposite way. Big volume bar and the market goes the opposite way. Alright, so again, look at big volume bar, kind of a big volume candle, and then the market goes the opposite way. You're thinking, oh, this would be a good time to short. But no, this big volume bar, big candle, and the market goes the opposite way. Big volume bar, bear volume, super huge candle. Now this one, I wouldn't even have taken a trade here. Why would I enter the market at that level after we had that big drop there? But anyway, the market does push back a little, but not as bad as the other two, and then it goes even lower. But what I'm looking at now, I'm going to show you how I got into the trade and talk about it real quick. I want to show you on the chart real quickly a couple things. So what I'm trading is a 3/8 trap, and that's what we're going to look at, that trade. Basically, this is a 3/8 trap. What we have here is this green moving average is a 3. This one is the 8, and then this is a 17, which is going to be your ultimate stop loss level. What we're looking for is that green 3-period moving average to pull back to that 8-period moving average. Gets close to that 8-period, and then we have a move to the downside. So we get contraction, and then we push back down to the downside. Market pulls back, push back to the downside. So here's a very good one right here. You can see where this pulled up to that level. This 3 pulled back to this level right here, and then boom, the market dropped. Nice big trade. So again, let me show you that. This 3 right here came right up close to that 8-period moving average right here, and then boom, expansion. The market dropped big time to the downside. Now in this case you had big volume bars, but this was the end of the day, so you're expecting bigger volume like that. So That's why you see that, and that's a little bit different. Or else if you have news or something like that. But for just normal, for the candles that show big giant volume like that, I never take those types of trades, and that's why immediately I got out of this trade, because I was like, I was going to take that chance, but then I said to myself, no, don't break my rule that I never trade those. So therefore I got out. But let's go to the video. Let me show you the trade that I took. I'm going to probably talk through some of it and help you to understand what I was looking at and doing. All right, so here's the trade that I took today, and the market pushed off on me so quick I wasn't able to really get into the trade like I wanted to. But we're not going to sit here and watch this whole thing. I'm going to move forward. I was drawing on the chart at certain times to try to explain what I was looking at, what we were doing, but the trade's getting ready to take place. You could see where this 3, you could see the green one pushing up close to the red one, which is that 8. So the 3 pushed up closer to the 8. The market went a little above, but look where that 3 is compared to the 8. It's a little pullback, just like you would see right here if you were looking at that to go long. All right, so if you wanted to go long, in this case right here, we see the 3 pull back to this 8 right here, and then we have a nice break away from that level, and then that's where we get into our trade. All right, but right now we're looking at getting ready to get into a trade right now to the downside. What I was trying to show you guys right here while I was marking that volume, you can see I'm pointing to that volume down there, and what I'm showing you is that that volume is decreasing. The market's moving to the upside, but the volume is decreasing. In order for that market to move higher and to continue moving higher, it would need to have more volume. So it would need to be seeing bigger volume bars coming into the market instead of smaller bars, each one smaller and smaller. It's like a stairway downwards. And therefore we don't have enough gas per se, enough fuel, whatever you want to fuel that market with. So in this case, we don't have enough, and the market finds a point of resistance, which is basically up in this area. And what I've marked right here is this fractal level. So I marked these fractal zones. You can see I'm marking it out on the chart right now, and I'm trying to show you guys that this whole thing is a fractal zone, because this candle is my fractal. I got two lows above it on the left and 2 lows above it on the right, makes this low, which is a 5 candle low, the fractal level. So therefore I marked those. It's a structural break where the market was moving to the upside, broke to the downside. Now I'm ready to get into the trade. I'm kind of late. I jumped in right there. I didn't have my stop loss set the way I wanted it, because I wanted it to be above this candle here. So you see I had to move those. I jumped in with 5 contracts. So normally I don't trade like this. I want you guys to understand, when you're trying to pass these evals, they're kind of easy to pass, and I take more risk. But if I'm trading my funded accounts, I'm a little bit more, I don't trade like this. So basically what I'll be doing is a little bit different. I will use the same strategy, but I don't usually come into the market with 5 contracts. I usually come into the market with 1 contract, or else I'll be trading micros, and I'll trade 5 micros. Now you can see this pushing down. You can see the profit that I'm making at this point. And we wanted this to go to a measured move, a 1-to-1 measured move. So we're at like 1200 right now. And then you're going to see where we're going to look for our target. I'm going to put everything up on the chart here. Let's push it forward maybe. Let's wait till this retraces. We went from 1200 to 400, 300, 200. The market's pushing back. A lot of times I also know that last 30 seconds determines that candle. So a lot of times the market tries to pull back here, get these traders trapped, and then it drops back down to the downside. These traders already get out of the market. They don't get the profit they should, and then the next thing you know, the market drops down. They get out for maybe $200, and then the market continues to moving down. You could have had $2,000-$3,000, but you only get $200. So this is our target right here. I'm making this level as the target. It's a 1-to-1 measured move, and I think I'm going to be putting that up on the chart to show you how you get that target. But basically what it's saying is, when we get this leg from here to here, let's say that's 100 ticks right here. We're saying from this point here down to here is going to be also 100 ticks down to that level. So that will be this would be like A, and then this would be your B, this would be your C, and then this would be your D. So what it is AB equals CD. It's a one-to-one measured move. So you get this leg, you get a correction. Now you have 3 points, A, B, C, and you're looking for the fourth point, D, which is going to be your profit, your target. The market goes there quite often. It's not automatic, it doesn't do it all the time, but it does it quite often. It's one of the areas where I look for a target. So this trade couldn't have been any better for me today. It couldn't have been set up any better to show you guys this, and it comes exactly like we wanted it to. Alright, so I'm putting this measured move in here. I put from point A to point B, and I put it at C, and then this is our target right here, 19593.50. That's going to be our target where we're looking for this market to pull back to. So we know that the market likes to move in these N waves. Alright, so the market's pushing back down, see it push back up. It would have to push, hold on for 1 second. I don't know what I'm looking at there. Must be looking at something. But anyway, this market could push all the way back up to this level, and it would have to violate this level in order for me to realize that we're going to probably push back up to the upside. Also, what helped me to get into the trade was we had a double top here, so we topped out up here. This was the high. Oh, you can't see it, it's to the left here. And then this was the high. These two highs were pretty much equal highs. And then we had this low here, which was this fractal. We violated that low, that fractal. That started the downside movement. That's why I wanted to get into the trade. I tried to get into the trade on the breakout, which I usually don't, but this thing broke so quick that I said, okay, so we'll set it back up. We sat it back up for the fractal move, also the 3/8 trap move, and you can see it much better here. Let me draw that 3/8 trap for you. So here's the 3, this green line. It pushed all the way back up to this 8, right here. And when it did that, we then had expansion right here. And that's where we got into the trade. Really should have been in the trade up here. Didn't get into the trade till we got down here. The market just dropped on me really quick. I always get into the market with market moves. A market order, because I like to see the market hit a level before I get in. Yeah, sometimes I can place an order at this level, but I'm sitting there and I like to just hit that, and I'm in the market. I'm trading like an aggressor, right? So you can see this pulling back on me. And I never would trade this way. Like I made $1,400 just on this candle right here. I would never let this come back to me, and I'm telling you guys right now, do not let this 14 come back to be a losing trade for you. All right, that wouldn't be really good trading or smart trading. But trading this evaluation account, I can be a little bit more risky. I could take a little bit more chances. I would have taken my profit here and been done with it. But here I'm trying to get qualified. I kind of can see the market structure. I know that I'll be stopped out if we get up to this level, and that's where I'm looking for the market to stay. Now, pretty much the market, like you see these big candles, and a lot of times the market stays between those candles for quite a while. And then you got another big candle, and you'll see the market stay between that. So if that was going to push up, it have pushed up to that candle, and we've been in a range right here. And that's what we are kind of in for a little bit. But you could see we had the move up. We did have the move back down. We got another move back up. So these legs, you could see, we're moving in N waves, and we're looking for the market to push down to this level right there. That's the 1-to-1. All right, so that's what we're looking at. Let's push this thing a little bit forward so you could see what happens here. Now, there is going to be some news come into the market, because basically at the time we were taking this trade, it wasn't anything that, it was basically, we had Fed's Bostic was speaking. So Bostic was speaking, and that made a little bit of a move on the market, and you'll see where this takes place. And that changed a little bit of the structure of the market for a short time. So the fundamentals changed the market for a very short time. Then the market went back to its regular structure that it was doing. And you'll see that shortly here. Matter of fact, I think it was at, what time was that? 3:30. And I can't tell what time we are right here. But I started to look like we were good. Thought we were going to move down, start hitting that level. I feel kind of confident because we did have another, the three pushed back up to the 8. Then we had this expansion again. And so then we started to see the market push back down to the downside. I started to think that we might just move straight down to the level. That wasn't happening. So now we got about 1,600, 1,400 again. Definitely should be looking at, like, now we already withstood a lot of this stuff. So we should be thinking about, couldn't we make it down to the next level? All right, we need to violate these lows, keep making lower lows. And that's what the market continues to do right here for a little bit. Now, it did get kind of worrisome here, but I wasn't too worried because of the structure of the market we were looking at. But you could see these lows here. We wanted to violate those lows, and I don't think we did right here. All right, so the market, I'm thinking, like, if we don't get through there, we're going to range, and I'm not going to get even half the profit that I got, and we'll be ranging in this level. All right, but instead we stuck this out. Let your winners run, cut them losers quick. Sometimes it's very hard to let these winners run, especially if you're trading like you're trading with these prop firms, because a lot of them have these drawdowns and they get you taken out of the market if you go from, like, letting this thing go all the way down to like 1,400 profit, and then let's say it goes down into the negative 500. I think if it's a $2,000 drawdown, then I'm out of the market. I'm out, and I lose my account. All right, so you can lose your account that way. That's why a lot of times you want to take your profit. But trading just a regular evaluation account, take a little more risk. Never would do this trying to make money for real. Would just take that profit. As you can see right now, we're at 17. Now we dropped up to 15. But right here we're making, you can see what that profit is. All right. And so I figured, like, I'm gonna get this in one shot because of the leg that we see. We could see this leg, and then we could see where the market pushed higher, and then we're thinking that next leg, that next big leg, back down to this downside right down here, and that will get us our target, our profit that we need. So I'm going to push this forward a little bit. Don't want to take all day. Let's push this forward a little bit. All right, let's back it up a little because we did get a big move here. All right, so you can see where my target is. I'm already out of the trade. Let me back this up a little bit. All right, so let's go from here. Right there, I'm at 24. Right there, I'm at 3,000, and I'm getting ready to get out of the trade. This was going to be the one-to-one level right here. I'm getting ready to get out of this trade. You can see I'm at 3,000, so I'm at 4,000, but I didn't get out quick enough. It pulled back on me, and I still made 3,500. So I was at 4,000, and it pushed back right there, and I got out the trade. Could have put my profit target down there, but I was trying to get 3,000 to get this account, but I wanted to show you guys this one-to-one measured move so you could see where we are. We're pushing right down to that level. So on this move here, I'm going to draw this out real quick. we're pushing down, we're pushing up, and then we're coming right back down, and we're thinking we're going to hit that leg right there. And that would be that 1-to-1 measured move. You can see that says 100%. That's a 100% measured move. This leg equals this leg. And I thought we were going to hit it right there. But instead the market pushes all the way back up. I'm already out of the trade, so I already made my profit. Already locked in what I need. But I want to just show you guys this measured move. So we didn't quite get to that level. The market's going to pull back. Push this forward a little bit. I think we could go like this, 30 seconds here. So we'll just skip forward a couple times. Okay, so let's back it up. So what I'm trying to show you is on each pullback here, this is what I was trying to show you guys when I was drawing this. I'll pull it back a little bit more so we can talk about that. So I was showing these big candles, and I was showing that after these big candles, you start to see the correction, see the move to the upside. And this is where you start seeing decreasing volume. So you could see again another big candle right here. You could see the decreasing volume right here, and the market pushing higher. That market can't move higher with decreasing volume. And in order to move higher, it needs increasing volume. And in order to move lower, it needs increasing volume. All right. And without that, the market's not going to move lower or higher. It's going to move higher or lower, but it's going to eventually fade, just like it did there, just like it did here, and just like it does right here. All right. Let's push this forward again now. Get closer to getting out of this and show you guys what happened where the market had some news. Again, I was showing again here, I was marking this on the chart as we were going, showing you how the market trades inside those big candles. You can see I boxed each one of them in. The market's never really broke straight down after it made a big candle, except right here. The rest of those, on those big volume bars, the market moved back inside. Out of 4 of them, 3 times it did. So I never trade those. That's why I got out of the trade immediately. Now what's going to happen here is some news comes in. And again, you can see I'm showing you that as this is moving higher, the volume is decreasing. Not good for the move higher. Now this is where I normally would get into the trade. Now I want to see this drop to the downside with bare volume, because you see that 3, it's touching the 8 now, pulled right back to the 8. Now I want to see expansion, so I'll be able to see the market push to the downside. So if this had closed to the downside, I would have entered this trade short, but watch what's going to happen, I think. Let's push this forward a little bit. We got 49 seconds. Let's push it forward. 18. Okay, so this would have been where I get into the trade. This would have been a bad trade though, but it's a great setup. It's a bad trade because the news is coming up. But look at this nice 3 pull back to the 8. Very nice 3/8 trap. Very nice expansion with the volume. Very nice entry. That's what you want to see to enter that market. Those things right there, that's just like perfect. But what messed it up was this candle right here. It's 3:30. And we got news coming in, and it pushed this market all the way back up. But the market stayed with the structure because I drew another fractal level right here. So this is a fractal zone where we have 2 higher lows on the right, 2 higher lows on the left. Makes this a 5-bar fractal. All right. Therefore, we use those as support and resistance levels where the market pulls back to those levels, and we're able to take trades off of those levels. So the market pulled back to that level, had a 3/8 trap right here, and then a perfect entry right here. Can't get any better than that. But then we have news, the very next candle, and that messed up this 3/8 trap, you would have been probably stopped out depending on where you put your stop loss. But that messed the whole thing up there. So that would have been a perfect entry. And then the market pushes right back down. And then it's heading back to that 1-to-1 measured move. Let's get to that point. Let's see how well the market likes to honor that level. And I can show you a ton of trades like that. It doesn't happen all the time, like I said, but it happens quite often. So we're going to push this thing. And again, the market pushing higher. There's no trade for me now. I'm out of the trade. I took my profit. But I just want to, again, touch on this measured move. So again, the market's playing around at this level, but it's not violating this level, this fractal level that we made. So I always trade those levels either to the upside or downside, depending on the market. So in this case, the market's moving down. I want to trade the fractal, the bear fractals. I want to use those zones as support and resistance. So use it as a resistance point where the market pulls up. I see less volume coming into the market as it gets to that level. When it gets to that level, I get into the trade. Now this 3/8 trap, the 3 pulled above the 8. But for me, if that 3 doesn't go above the 17, then I'm kind of good. But this would have been not a great trade yet either. You shouldn't have taken this trade yet at that point anyway, because you didn't have that expansion. All right. So you're tight now. You're constricted here, but then you want to see that expansion. And that's when you want to take your trade. Let's push this thing forward. Now you can see where we're looking for. We're looking to get down to that level, see how well that 1-to-1 measured move plays out. I already had it drawn out long before the market ever got there. Had that drawn out long time before the market even thought about going there. But where does the market end up going? Let's see. That market takes us right there, hits us there, and that's where it is. Went right to that level, right where we thought it would. So I ended it right there. That's where we stopped it. We saw that 1-to-1 measured move. We entered the market based off of those 3/8 traps. And there's another one here. There's another one here. This is the one where we got into the trade. So I'm going to mark it real quick. This is the 3/8 trap where we got into the trade. This is a better 3/8 trap right here, but then the next candle afterwards was big news, which disrupted the trade if you would have taken that. So you would have had to make sure you know that news was coming up, and you would not have taken that trade. You would have just waited, and then you would have seen if you can get anything here where you break below these levels and possibly take a trade down to the 1-to-1 leg right here. All right, so hopefully that was something that helped you all out. I'll talk more about this 3/8 trap. Matter of fact, I got a big video I'm about to put online talking about it. So stay tuned. Look for me on there on YouTube here, and I'll post that up again. And for everybody else, hope you had a good one. Hope you enjoyed the video. Until next time, have a great one. God bless. So long.